But in terms of like the day-to-day operations, right, it says right here, right, what actually matters is the cash timing. That's the real scoreboard. And the 13-week cash flow forecast is the tool to practically be using that from an operator's perspective, whereas EBITDA oftentimes is more investor perspective, right? And I think, especially for small businesses, I think the same thing in some capacity could be said about a profit and loss and a balance sheet as well. Because there is a lot of financial activity that takes place day to day in a business that isn't reflected on a profit and loss or an income statement, right? And that's kind of the similar thing where it is useful to have a P&L and a balance sheet and review that for the prior month or the prior quarter. Definitely is useful, but that's not how you're managing cash day to day. It's not a good tool for managing cash day to day. And that's where there's a lot of gaps for a lot of these small businesses. And oftentimes why people are feeling frustrated, right? Because they might have an in-house accountant. They might have an end of year tax CPA. But even with the bookkeeper, even if they're doing a great job on the books, if you're still looking at stuff that was a month ago, 2 months ago, there's still that gap in terms of how are we managing cash? What is the thought leadership around managing cash in the finance?
Yeah. Well, and just to put a fine point on it, EBITDA is not cash. And that's the fundamental problem here, is that people get tricked into thinking that they're managing their business. And it's the wrong tool. And all tools are good for certain projects. So to give you an analogy, like if I want to go cut down a tree, I get an axe out. And I can use that axe to cut my meal at the end of the day, but that's not the best tool for that job. I need a knife and fork. And so all tools have a purpose. EBITDA has a purpose. It is not the right tool to be used in most small to medium businesses.
Mm-hmm. Yeah. And again, it does have its purpose, right? It's a lender favorite. It's an investor favorite in terms of benchmarking, conversations around acquiring credit. But again, it's telling you about performance. It's not survival, right? What you just said, right? That's the key point of this thing is it is not a cash metric. It's talking about performance. It has nothing to do with your day-to-day survival and growth as a company.
Yeah. Might I just talk about just the timing impact of this?
Yeah.
This is the crux of it, right? The reality is, let's take an example. So you're starting up a business. You need to pay deposits on the place that you're kind of moving into. Those deposits don't go into EBITDA. You need to buy some inventory so that you're ready to sell something. Those payments don't go into EBITDA. You make a sale and the client hasn't paid anything yet. That sale goes into EBITDA. Like that's the problem. This is where the timing differences all manifest itself out. All of a sudden you're like, what the heck? I've got to make payroll on Thursday. I've made all these sales. I've paid all this money out in deposits and inventory. And I've got no cash flow. But my EBITDA, you're like, all right, well, if that works for you and you can pay wages with EBITDA, then fantastic. If it doesn't, then we need to use a different tool. And we need to have a CPA that actually understands that right tool, right place. And that's what makes STAXX like highly unique, is that we understand the time and the place for these tools. And we are highly focused on understanding the timing differences that's caused between cash and EBITDA. And because we have that knowledge, we're able to develop resources that give you the tools for both angles. So if you're talking to an investor, great, give him a P&L with an EBITDA on it. If you need to manage your business for the next 3 months, then let's talk cash flow.